you're going to you are required to calculate operating expense for the year and prepare a balance sheet as at 31st March. All right. So practically, if you want to find out operating expense can be found out normally from P&L account and trading account. But let us see how the question proceeds. We need to draw a balance sheet. So balance sheet is required. How will we be finding out operating expense? Try to concentrate. If I do sales minus COGS, I will be getting GP. Say I am drawing balance sheet. I'm drawing, sorry, trading and profit and loss account. Just the thing is that I'm drawing in a straight manner. GP minus operating expense, which is the figure which is asked in the question, will be nothing but EBIT, operating profit. Because why it is termed as operating profit? Because operating expenditure is reduced, but interest is not reduced. Financial expenditure is not reduced. Minus interest will be EBT, and we will follow if the tax rates are given or not. If tax rates are given, net profit to sales after tax. So there is a tax portion, and this is the profit after tax. If preference dividend comes, again I can reduce preference dividend also. Alright, which figures are readily available? Sales 60 lakhs, I can write down 60 lakhs, yes. Those all are ratios, current ratio. COGS 18 lakhs. This will be 42 lakhs. Interest on debentures at 15% is 60,000. So interest on debentures is given 60,000. It is at what rate? 15%. So I will be getting answer of debentures also. See, at 15%, if the interest is 60,000, 60,000 divided by 15%, that is the 4 lakhs will be nothing but debentures. Agreed? Because 4 lakh into 15% will become 60,000. So I have taken this into consideration. Sundry debtors and sundry creditors each are 2 lakhs. So debtors are 2 lakhs. Creditors are also right. So which figure I need to take? I have already taken it. All right. Let me do some of the equations and try to find out the answer. See, here I will be having answer of equity and reserves. How reserves? See this. Share capital to reserve is 7:3. So let me write down. These two ratios are 7:3. Correct. So I have taken this into consideration. Return on net worth, all right, that can be found out. Tax rate is 50%. Let me even write down this. So we have considered even net profit to sales ratio after tax. So profit after tax divided by sales is 6.25%. Profit after tax upon sales is 6.25%. What is sales? 60 lakhs. So profit after tax is 6.25% into 60 lakhs. Answer will be 60 into 0.625. 0625 is 3,75,000. Will be profit after tax. See, if profit after tax is 3,75,000 and the tax rate is 50%, then earning before tax will be double. 375 into 2, which is 7,50,000. Do you agree? Because 7,50,000 into 50% will be 3,75,000, and my profit after tax will come to 3,75,000. If this figure is 7,50,000 and this figure is 60,000, then this figure will be 8,10,000. You can verify 8,10,000 minus 60,000 will be is equal to 7,50,000. If this is 8,10,000 and this is 42 lakhs, the difference 42 lakhs minus 8,10,000 will be 33,90,000. Will be nothing but operating expense. So I've got my first answer. What are your operating expenses? Yes, I've taken into consideration this. Alright, I'll have to find out other figures. Inventory turnover ratio based upon COGS and closing stock. I think I'll be getting closing stock from here. Will be 12 times. Inventory turnover ratio is a COGS upon closing stock. It is given, it is closing stock. Inventory turnover ratio is 12. COGS is 18 lakhs. Will be is equal to closing stock will be 18 lakhs divided by 12. 1,50,000. Closing stock will be 1 lakh. So I am getting answer of closing stock 1 lakh. Right. Debtors, closing stock, all are part of current assets. Alright. Return on net worth is given. What is net worth? Is the same as equity. Try to concentrate. Net worth is equal to equity. So what is given is a return on equity. If there is no preference share capital, what is return on equity? It is return on equity is equal to earnings available to equity shareholders, which is nothing but profit after tax, because there is no preference dividend, divided by equity multiplied by 100. What is return on equity? 25%. I am not multiplied by 100, so I write down 0.25. Profit after tax, am I having? Yes, 3,75,000. I will be getting answer of equity, not equity share capital. Equity is equity share capital plus reserves. So equity will be 3,75,000 divided by 0.25 is 15 lakhs. So equity will be 15 lakhs. This total is 15 lakhs is divided in the ratio of 7:3. So 15 divided by 10 into 7 is 10,50,000. 10,50,000 will be equity. Reserves will be remaining. That is 4 lakh is divided in the ratio of 7:3. So this will be my answer. I have considered this also, tax rate also, this also, inventory turnover ratio also, only current ratio is fine. What is current ratio? Current ratio is current asset divided by current liability. Current ratio is 2. Current assets we are not knowing. Current liability, there is only one, which is creditors. No other information of bank overdraft or other current liability is given. I can assume that current liability is only creditors. So creditors will be 2 lakhs. Current liability is 2 lakhs. Current asset will be 4 lakh. So if current assets total are 4 lakhs rupees, and if debtor is 2 lakhs, closing stock is 1,50,000, then cash balance will be, this is 3,50,000, so cash balance will be 50,000 and my total will be 4 lakh. Do I know answer of liability side? Yes. What is current asset? 4 lakh. Remaining figure will be fixed asset. Let me find it out. This is 15 plus 4, 19 minus, 19 plus 2, 21. 21 minus 4 is 17 lakh. And the total of balance sheet will be 21 lakhs. Again, this question is not difficult because ultimately it is to find out one or other figure from the ratios which are given. You should start with some nominal figures like this, which are available, so that you can easily find out the answer one by one. See, the sequence is not important. If you say me, sir, I have found out first closing stock from this, it is all right. I have found out after 2 points, but if you find out first, it does not matter. The answer should come like this, and this is a correct answer.